Big flush or big rebound? Today we're going to try and decode the crypto market. Hey guys, it's Keith Allen. Hope everybody is having a decent week. Things got pretty exciting yesterday. Fed rate cut 25 basis points as expected. No surprise there, but perhaps the price action that followed was a surprise to you. Very rarely do we see a sell-off like that when we have the news of a rate cut. But I think what we saw transpire was both crypto and TradFi markets really moved into some year-end profit taking amidst uncertainty that, hey, maybe next year is not going to be what we think, right? Uncertainty about economic growth and inflation in 2025. We've definitely seen a pullback, and we've seen that in across all markets. So that obviously flushed Bitcoin down below 100K briefly. Alts were punished even harder, man. I mean, I think the vast majority of alts are in double-digit retracements over the past couple of weeks from their recent highs, and now traders are looking at whether that was the last flush or if there's more to come. So we're going to look at these things in this analysis. I'm going to take a look at a broad range of stuff. We'll do some technical analysis. We'll look at order book and order flow data and FireCharts, and give you a peek at some of the institutional grade market data in the MI dashboard to see if we can gain some insights onto what's next for Bitcoin and the broader crypto market. Before we start, as per usual, do me a favor if you haven't done so yet, smash all the buttons and especially leave a comment. Live comments are open, by the way. If you're watching on YouTube, live chat is open. I always welcome the comments and engagement from you guys. I love it. So if you've got questions, if you've got insights, absolutely love to hear from you. Live comments are open. Another bit of housekeeping. We do have at Material Indicators, the huge holiday sale going on right now. I'll have links in the description, or you can head over to materialindicators.com, get 33% off every single plan, pretty much now through Christmas. So let's climb in and first take a broad look at the market here. Let me go ahead and start sharing charts here. And we're going to open up on the market indexes just to kind of illustrate what we've seen happen over the past 24 hours. Yes, Bitcoin pulled back, 5.5% yesterday. We also saw big downturns on the S&P, on the Dow, and the NASDAQ, right? So today, we're seeing a bit of a rebound on some of these assets, at least for the moment, although that may be pulling back as we're seeing it happen in Bitcoin right now. We're back below 100K, it looks like. So heading over to the Bitcoin chart, I was encouraged that we had reclaimed the 21-day moving average, but we've just, in the last few minutes, lost it again. So that's something to be aware of here, right? Somebody in our group chat just posted, hey, is this just part of the big pullback, or is this a clue that the bear market has begun? Well, you look to indicators like this, like key moving averages, as an indication of what's happening, and if the validation would be losing them all, of course, but as an early indication, and maybe more validity even on the weekly time frame than on the daily. But I'd really start paying attention to things if we started losing them on the weekly, right? Because that means we're not going to lose. We would then potentially lose the 2021 top and on down further. The trend line is the line in the sand as far as I'm concerned. So, but we're going to watch things develop as per usual. Good morning, Wakas. Good to have you with me once again. And again, for anybody who's new, live chat is open for you guys if you want to chime in. So in terms of what we have been seeing, I shared a chart. I think I shared this yesterday. Let me go back and find it. I created a new trends chart using diagonals instead of horizontal lines, which is pretty interesting. And we can see here clear rejection on the breakout here after an all-time high at 108 and change. And so we had really narrowly escaped a bigger dump in my opinion, and that bigger dump may be coming, right? We're fighting for this 21-day moving average right now. if we were to lose that, and these are quarterly support levels here, that we have been maintaining for quite some time, right? Since at least, well, for a month now. So we'd like to see this continue. If not, then we get that deeper correction, and we have been, calling for a deeper correction for quite some time, right? Just as just to gain your bearings here, the orange line is the yearly open trend, and all of the white lines are quarterly open and close trends. So we're hovering here in this channel here at the moment. We've been here for a month. A deeper breakdown certainly not out of the question here at this point. And as I pointed out yesterday, where we could go potentially on these breakdowns, we've called for a 20 to 50% correction at some point in time during this bull market, and it is yet to materialize. So yes, we could have a correction that deep and still, still maintain the bull. So keep that in mind. Good morning, Alex. Great to have you with me again. I appreciate it, and I appreciate the kind thoughts as always. So, in terms of where those corrections could potentially take us, if this develops, right? So we saw this big flush. Is this the end, or is there a bigger pullback coming? Right. That's really the big burning question. And so, if that pullback does come, is it just a deep correction that the market is waiting for, or is it the beginning of a bear market? Fundamentally, the signs are there. The strength is there for Bitcoin. We obviously still have ETF flows, believe it or not, even positive yesterday. It will be interesting to see if there's some profit taking today in light of what's happening here. I think some of the moves were a little bit late in the day for TradFi yesterday, so we'll see how things develop from there, right? It was getting scary for a lot of folks last night as we started to see things pulling back. So that's part of it, right? But fundamentally, the strength is there for Bitcoin. Economically, I think this is what has the market concerned is, what is going to happen in 2025, and how closely are we going to be watching the economic data, because we know the Fed is likely to pause here for a while, and that's really what I think got a lot of traders concerned yesterday. In terms of health of the market, though, health of the economy, excuse me, I haven't even looked at these. So we're looking at this live in the Fire this morning. GDP growth looks like it is up quarter over quarter. That's positive for the strength of the economy. Jobless claims look like they came in cooler than expected. That's a positive for the strength of the economy. PCE. Coming up nominally here. GDP sales up a bit. Jobless claims 4-week average up slightly above forecasted. So a bit of a mix here. Existing home sales, also another one that we watch closely. That seems to be on the increase. So maybe, these are the things that point to a longer pause after yesterday's cut. So that again is why the market has been selling. So going back to the charts here, what's going to happen at this point? We can see that we are getting the pullback here, and we are at the moment losing that 21-day moving average. If we take a look at liquidity in the order book, we can see we do have a little bit of bid liquidity here down to the 95K level. If we zoom out, we can see this ladder extends all the way down, actually beyond 95K, down to the 90K. Looks like some of the bids have come up from 90K into the, say, 92K range. So don't be surprised if we touch 95 or even 90 today. Now, we did have, I got to replace it here, but we do have a channel in that range that might be interesting to you guys. Where we seem to be getting some consolidation early on, and then it is served as support on the past 1, 2, 3, 4 tests of that level. So keep that in mind. There's a potential bottoming here around 95, 94 and change, and then of course that gets us down to 91.6, where we bounced from a couple of times. And also notice the confluence between the 50-day moving average and this level here. So 50-day is around 91, right? So this could be an interesting potential landing zone for you. If you're looking for that. So, in terms of buying these dips, I think it's important to watch for the volume to continue. And one of the things I noticed this morning is it appeared that, like we had seen a week or so ago, that we might have, see some T-whopping here. This is the larger classes of whales coming in and using these smaller order classes to buy when liquidity is low or when they want to hide their intentions. And we did see that happening out of the yellow class for a few hours this morning. It looked like the green class also might be starting, but that too has ceased at this stage. So you can see thin liquidity that has been cleared. Where the liquidity has been cleared out and it's thin, it's easy for price to move back up, but it obviously takes some buying here. Looks like green is back on the gas here, so we could see that happening. And it's really not a lot of friction until we get back up closer to all-time high territory. So it doesn't take a lot of volume to move through this. We just need to see the market show that desire to do so. So I'll be watching this to see if we see, larger than average volume coming out of these order classes, these smaller order classes here, while Bitcoin tries to grind here. Now, in terms of alts, what does this mean for alts? We saw, alts obviously got hammered even harder than Bitcoin yesterday. ETH pulling back, also losing the 21-day moving average. It's now moving into range of the 50-day moving average. Looks like something has changed here. It's not my normal chart for ETH. This one is, though. And so, hey, maybe same set of circumstances. Maybe that one pulls back to the 50-day moving average. And if that doesn't hold, we have other situations here where these others could come into play. Ultimately, you want to see it hold, right? For this market to continue and this momentum to continue, we want to see it find its footing and hold at some point. Now, again, these big corrections can happen during bull markets, and it remains to be seen whether this is just part of a bigger correction that might be developing, or if this is the early indications of the end. Well, fundamentally, I don't think we are, but we can only speculate on that, right? We've got to watch the technicals and see how things develop. Now, I want to share with you something that we don't share very often, and that is our MI dashboard. Some of the metrics we have here in the dashboard really interesting. This is a chart that shows price returns and drawdowns of all USDT pairs on Binance for now. And as you can see here, by the bright yellow, we've got a lot of coins deep in correction over the past 14 days. Most of them, the vast majority of them in double digits, and most of those upwards of 40% or more drawdown. As you can see, some big pullbacks here. So that does lead to opportunities, right? The question is it leading to more drawdown, or is it going to lead to big bounces? Ultimately, we'll find a place where we get to those big bounces, but it's time to do your homework, folks. It's time to do your homework and figure out what the setups are for the way you like to trade, right? You can see by this chart here on the bottom illustrates it also. Positive returns is the blue line, right? So less than 20% of coins, we'll say about 12%. In fact, 12% of coins are showing positive returns, and only 4% have less than 10% drawdown. Okay, that means 95% of the market has more than 4% drawdown here over the last 14 days. And you can see it visualized here in bright yellow. You can see that the gains visualized here, or returns, I should say. This is showing you we're down deep. So a perfect time to look for those setups, right? And it's not just finding the setups, it's finding setups and also waiting for buy volume to return. So, we looked at some coins yesterday on the stream. I forget who it was who asked us to look up some coins, and we did that. Litecoin is one that's getting punished a bit right now, and I'm not gonna lie, I made some not great moves last night. I think I had a Litecoin position in profit, and it got away from me, and it started to bleed, and I was concerned that it would bleed more, and so I sold it. Took you know took a little lump on that, and that's okay. Um, Looked to re-enter and felt like we might bounce. Took a little piece, didn't like it, closed that position, and now I'm looking for a better entry. I'm looking for an entry, maybe down here around this 50-day moving average at 98, around 98.50. And before I take that blindly, I'm going to look to see if we have any support coming in, if we see any bids coming in on FireCharts to give that some footing there. What did we look at yesterday? I think it was it Philcoin? I have SHIB up right now. You can see it has fallen through the 382. And these are some prior RS flip levels that have held for the moment, but I don't have a whole lot of confidence. I don't have a whole lot of confidence in anything at the moment, but I would look to maybe some stronger technical support where we have both the 21 and the 50-week moving average converging here, trying to golden cross actually. So if we get that flush, that might be interesting. Doge, another one which a lot of people like, especially since what's his face is now got a new job that he that he named the Department of Government Efficiency. Let's see what this looks like. If maybe it's coming into an interesting spot. Well, it's at the moment fighting for prior support. I think that's likely to go lower. And same set of circumstances, I'm looking to the moving averages as potential landing zones. Oh, it looks like it did just come down to the 50-day and trying to hold there. Not so sure it will. The fact that it lost the golden pocket here is a concern. If it loses this, maybe the 382 becomes an opportunity. Otherwise, we got a deeper dump coming. What was it? I think it was Filecoin that we looked at yesterday. It also lost the fib, lost that prior support level. This is something I remember. We were looking at the support level yesterday at $5.73, and said if that doesn't hold, then we have this 50-day moving average, which for the time being is holding. We'll see if this continues to hold, but I would be looking for volume to come in, which we're not really seeing a ton of yet. Things to keep in mind as things develop. But really, this is a time that you should be screening charts and looking for those setups and looking for volume, right? Don't just buy the setup. Make sure you've got some volume coming in to ensure that you're going to recover those. And if you're looking for ways to find those dips, you might want to try the MTF mean reversion indicator. We looked at this macro trend chart. Let's see. Do I have one of those open? Yeah, a little scalp yesterday, right? But maybe, just maybe, things go lower from here. I'm not seeing a ton of strength here in the charts just yet. These positions did recover briefly, but then returned to mean, and then it broke down again. So is this part of the bigger, greater shakeout, or is this the beginning of a deeper correction, or potentially beginning of a bear? Good question. What do I think about Polygon/Matic? Great question, Alex. I actually had some of this, and when I started to see things breaking down last night, the first thing I did was go straight to my alts and protect, right? Because I didn't want to give everything back, especially after I did so on Litecoin, right? So Polygon was one of them that I had been staking. Polygon, Solana, and ETH I'd been staking. So I've actually moved those out of staking a couple weeks ago. So fortunately, my Polygon and my Solana are free from staking. The ETH is still in the process of being unstaked, which I hate that. I hate that you got to, if you want to make a move, and that's something to keep in mind if you're yield farming, right? What is your unstake time? Because that could prove to be detrimental. And how much am I making, right? How much have I made out of the staking that I put in? Not a lot, to be honest with you. I don't know that it was worth it at this point. But let's take a look at that chart. My Matic, I think, actually closed in profit last night. I had set a stop loss on it so I could protect. I'm still trading this on Coinbase, which still calls it Matic, by the way. And on Binance, you don't have the history anymore because they changed the chart. So I see a bounce here from the 50-day moving average at the moment. Anyways, let's widen out a little bit and see what's up here. Okay, so Matic coming off of a breakout here, which was great to see. Made some good money on this move. That was a fantastic move, right? Like a lot of alts that just actually skyrocketed since the election. So things coming back here at this point. Maybe the 21-week moving average becomes the last line of defense here. That's at around 44 cents. And if not, then it's right back to the trend line here. I don't like, I'll be honest with you. After you get a 150% run, how much more do you want? How much more can you expect? I mean, we all would like to see these coins return to their prior highs and make new all-time highs. I'm not saying it's over yet. This is one of those coins that seems to do well, like Bitcoin, above an RSI of a weekly RSI of 42. So we're still well above that, but obviously pulling back. So I would be looking to see if we get a bounce from here, right? And so depending on how you want to play it, I'm first looking at this 21-day moving average, 21-week moving average. Let's see what it looks like on the daily. On the daily, we've got a lot of, pretty close range here between the 200-day and the 50-day that it's wrestling for right now. 50-day is up around what, 50 cents. And the 200 is at 47.5. So, these are a couple cents apart. This is an interesting range here for sure, but it hasn't bounced yet, in my opinion, right? It's recoiling a little bit. It's come back a little bit, but it's fighting for this. So this is something that we have to watch today. And again, you might also watch, this is a little known trick that I learned years ago from a guy I used to watch named Kirby, who likes this weekly moving average, and bounces from here can be phenomenal, right? You look at all the times that prices emerged or bounced from that level, and times that it's broken down, and what happens. And every time it's above that level, things tend to trend up. And when it is below that level, we remain in a bearish posture. So set that one up on your chart and thank me later. Have you met LTC, or would you please? Yeah, we did look at Litecoin a minute ago. I think we did. So you can, I encourage you to go back and rewind if you missed it, but Litecoin was not my friend last night. I had commented that I had some positions that were profitable that I let slide below. That was operator error on my part. I should have had my My stop losses moved up to profit, but it slipped below. So I closed those positions looking for another entry on Litecoin. And at the moment, I'm looking at this 50-day moving average as a potential spot for that. Um, what was the other one? Jerry, would I mind FTM? Not at all, sir. Let's see what FTM has in store. Let's go to the trend precognition chart. And you can see we also have down signals on Polygon on the daily. Excuse me, on the weekly. Let's see if we got anything here on the daily. No new signal, but it hasn't reverted yet. So we're still in red territory on the daily. MACD also kind of supporting that. Phantom FTM. It's pretty much the same story, right? We see a breakdown below the 21-day moving average, and now the 50 is coming into focus. Let's zoom out a bit and see if it gets any better. What's positive here is we did have some golden crosses developing. Obviously, the 21 unwound, and now the 50 trying to unwind from the 200. Obviously, we got to have some recovery here, but Phantom had a great run too, right? How much was this move? I mean, what do you want? You got 467% in how long? 467% since August. That's just tremendous. Tremendous. So again, don't be greedy, right? If you're looking for more out of this, you might be a little greedy. And in terms of what this has done since its breakout down here, that's 682% over the past 14 months, 15 months. Gosh, those are beautiful. But at this point, I think you've got to be patient. I think you don't look for the first potential landing zone. I think especially if you took some profits up here. If you haven't taken profits up here, you might want to protect. And that's something that I think everybody needs to do, is make sure that you are protecting your profits. You don't want to give everything back here, especially when it comes to alts. There are very few that I have a lot of confidence in. Litecoin is one of them, and I got I got a bad taste in my mouth from last night, but I will go back. I will go back to Litecoin, but I'll just look for another. I'll look for the right setup for it. So again, if you haven't locked in profits from some of these massive gains, I encourage you to do so. At least, that doesn't necessarily mean close your position, but at least set a stop loss or a trailing stop loss that's in profit, that is protecting you from either giving it all back or moving back into the red, because you don't know how this is going to develop here. Now, historically, hey, maybe we see something big happening on Christmas. Historically, we've talked about December 17th being kind of a big day historically, and this is no different, right? That's not the right chart I want to show. Give me a second. Let me find the right chart. Where's my big long deal? Cup and handle, still playing out. Macro trends. Let me go find this one. Bear with me. Here we go. All right, so we've had some history, and I've shared this chart a couple times this week, and you can go look at the previous analysis to see all this drama that happens around December 17th. Last year, it happened on December 16th, or excuse me, 2022. It happened on December 16th. But these are times that we see either trend reversals or breakouts or breakdowns happening, and so. Whether, we've been wondering whether it was going to be the breakout above the prior all-time high or the breakdown that defined the moment this year. December 17th, we have the all-time high, and at the moment we're seeing a breakdown. But again, we still have this battle for the 21-day moving average going on here, and for the moment, Bitcoin seems to have recovered. We'll take another look at the order book and order flow data. As you can see, we have the smaller order classes buying. Don't think that that's just retail. Okay, there could be, there's periods where you see these diagonal lines that are pretty smooth without a whole lot of drama to them, a whole lot of contour to them, that could indicate T-whopping going on. We have to kind of calculate these things and look at the volume that comes out of them as things transpire. But it looks like they had started, green had started and then stopped, maybe started and stopped and started again. So it's not a real consistent thing right now. I think there's a little bit of a shakeout going on here. But as you can see, the ask liquidity is pretty thin going up back towards 105 and 108 really. If we can climb back up there, I still have a target of 122 and change coming off of this cup and handle, and that's not invalidated yet, right? So losing the 618, not great, but maybe we can regain it and move back up. The fact that we've held the 21-day moving average is a positive thing. And that may be the saving grace. We'll have to see how things continue to develop from there. What is this? Let's see. Hey, Keith, if you look at the past two alt seasons, 245 days after the halving, yes, I researched and marked my T3 chart. Alt seasons kicked off. If it holds true, I have December 23rd-ish marked on my chart. That is cool. That's insightful. I appreciate you sharing that with us. We were talking about, and AR also goes on to mention he studied Bitcoin dominance in D3 one day at a time, I guess. Yeah. I'm by no means an alt specialist, so I really appreciate that insight. What I'm expecting and what I've been expecting, especially in terms of using Bitcoin dominance to try and track this. We've seen USDT dominance and Bitcoin dominance do some interesting things here lately, right? As we were trending down, we saw Bitcoin dominance falling and USDT dominance falling as things have developed here. Obviously, a lot of money rotated back into USDT over the past 36 hours or so. And same holds true for Bitcoin, right? People getting out of alts that are getting wrecked and getting back into Bitcoin. So I'm wondering if we're going to see maybe some resistance here at the trend line and some consolidation for Bitcoin that would pave the way for a true alt season. When you look at the gains that we've seen out of some of these alts, right? 150 up 500%. That sounds a lot like alt season to me, but we didn't see something that we typically see with an alt season, and that is Bitcoin dominance falling below 50%. So I was expecting this to trend down and continue to trend down to that range. It didn't do so. Hey, maybe it doesn't. I don't know. But I would expect to see I would expect to see more of a breakdown of Bitcoin dominance. So let's say we get up to this point, which is we're very close, right around 59, 60%. If we get up to that level and Bitcoin struggles to break it, we could see at that point some consolidation in this range, consolidation above 100K would be very healthy to me. And then we see a further progression. What's important though, is these consolidation ranges all along. These have always been important to me for the primary reason of not just showing resistance and support, but in the event that we have these bigger breakdowns, there needs to be some structure to land on. And so this is really the first structure. The nearest structure is down here in this 86 to 91.6 range. And then below that, we look at the 2021 top, and we have our double bottom here, 54, which correlates with the trend line. If we get below that, right now we get into into this 40 to 45K range. We had some consolidation here, and then obviously when things really kicked off for the market in this 25 to 30K range, I think this is like, if we lose the trend line, it's done, right? Even if we lose the 21 week moving average, 21 day moving average here, that likely puts us down there, um, you know, to where it will be interesting whether we could recover. This would be obviously the final line in the sand is the trend line. As far as I'm concerned, let's see if we have any confluence between the weekly moving averages. Not just yet. Now these could get drawn up over time, something to watch as well. And you find confidence when you see the moving averages going above those key support levels. So this is something that we'll keep a close eye on. In the meantime, that nearest structure is right here. And so the problem is there hasn't been a lot of consolidation. So I wouldn't say this is super strong. It's the only thing we've got at the moment. AR saying kind of weird that both times it's 245 day-ish range. Doubt it will be that easy, but you know what they say about history. Well, that's exactly the same thing that I've said about this chart with all these December 17th events happening, and it also holds true for where we sit in the halving. Right, we're very early in the cycle, and this is why I'm still bullish and I'm not panicked yet. Because we are so early in the halving, I think there's time for this to happen. So sure, we could see consolidation. We could see a Christmas gift. We could see, inauguration day as either a catalyst for something, whether it's a catalyst for more demand, or whether it's a catalyst for buy the rumor, sell the news event, remains to be seen. But these are all the kinds of things that I'm looking at. AR has a little more insight. He would say rejected the trend line would be lovely. I don't know, Keith, with DT and his cabinet picks, et cetera, it'd be hard to believe positive things aren't in store for crypto. Exactly, right? So at least until we get into a situation, right? I think this is positive for crypto, at least in the short term. And we've seen much of that already, right? But there's a couple of potential red flags. One would be, what if DT doesn't do all the things that he says he would do? I'm not even going to go into that, but just marinate on that for a second. Also, what if he attempts to go for this Bitcoin treasury reserve, which is going to take some legal maneuvering. So what if that gets rejected or denied? That would obviously serve a big blow to the market. And I think he wants to do it, but I think he wants to do a lot of things that he hasn't necessarily thought through yet. So if that for some reason fails, that would be a potential catalyst for a big dump. And I think the low hanging fruit, and probably the biggest thing, and it is the concern over the economy. Once tariff, if he does indeed start tariffs, that isn't going to be good for the health of the economy, and we're going to see things go back to risk off. So that's probably the most important thing, and the most likely scenario to watch is how the U.S. economy fares through what's going on. He's getting served a very strong economy. What he does with it remains to be seen. So that's probably the bigger concern. Trend line on BTC is what I was referring to, and yes, a good point about DT. Thanks, man. I appreciate it, AR. I appreciate all you guys, man. This has been a fun stream, guys. Always cool to engage with you guys and check out some coins that I may or may not have my eyes on. So I thank you guys for that. I'll leave you with a parting shot of FireCharts on the order book, and we can see the degradation continues. I just don't think this dump is quite done dumping. So be mindful of that. Protect your profits. Make sure you're waiting for volume and buying to begin and return before you ape into things. And trade safe, my friends. That's pretty much how it rolls. Busy day ahead, man. It's been a crazy busy week. Hope you guys are navigating it well. Again, if you're interested in any of the tools that I've been sharing, be sure and check them out at materialindicators.com. Everything's on sale right now for 33% off. AR, thank you, man. I appreciate it. With your guys' help, we'll get there, right? I'm just going to keep serving up the content, serving up what I think is relatively unbiased insights to help you guys make decisions. I'm not the clickbait guy. I'm not the guy that's out there engagement farming. I'm just doing what I do on the daily. So I appreciate the support you guys are showing me. Have a good one, guys. We will chat again soon.